Okay guys, welcome to today's video. So yesterday we talked about SMC for scalpers. Today we're going to be looking at SMC for day traders, right? So still on ETH. Remember yesterday we covered that I was showing you a beautiful scalp trade I got that, and telling you how SMC is a beautiful strategy that you can use irrespective of the kind of trader you are. Either you're a day trader, you're a swing trader, or you're a scalper, you can use SMC to catch beautiful trades if you know what you are doing. And one of the reasons why I'm actually even showing you guys this is to help you, right? Most of you, your eyes are not yet opened. One basic aspect is to know the strategy, to be able to see it and to execute it, right? Okay, you understand the strategy, you know what it entails, then you should be able to see it on the chart. Then once you see it, have the confidence to execute the trade. It means go and place that limit order on your exchange, whatever platform you're using to trade. Okay, so that's a bit for aspect. So as I take you through the examples, right, some of those trades, you would be able to relate, you understand the concept, and you can not basically the same pair, it must not be the same pair. You can also see it because most of what we're doing is repetitions, right? Past price actions, they repeat themselves, so we go ahead and trade them as long as we have understood what price is doing at that particular time, the way it's reacting, react with it. So you can also see an observation here, understand the moves, and if you see something repeating itself like this on another pair, so you can go ahead to trade it, right? So you give you an opportunity to make money. So if you notice what we did yesterday, right, for scalpers, just a brief guide to when we saw this 1 hour engulfing candle, right? So he gave us that move to take our trades. We went to 15 minutes time frame, we saw this imbalance and we marked it as a point of interest. We waited for price to push down, right? Tell us that, oh, we want to go down, then we caught a confirmation entry, so it means price is going lower, right, into lower regions, right? So the day trade there that occurred is actually from two ways, right, that you can see it. If you go to the 4 hour time frame, right, of course for day traders you want to analyze from the 4 hour time frame, you can see this imbalance, right, this aggressive sell imbalance that market did, this candle closing right below the previous buy candle, right? There was the previous buy and market aggressive closed, right? So if you mark the 50% level of this imbalance, you see that price actually tapped into that 50% level, and that is a point of interest to catch this continuation trades, right? So if you go to smaller time frame like the 15 minutes time frame, you would see, or 30 minutes, you see, let's mark this midpoint very quickly. So I'm rushing this, I don't want this video to be too long, right? So if you mark this, you see price actually mitigated that, right? If you had not seen that on the 4 hours time frame, that's a point of interest, that's a confluence. You would see that market actually used this time frame order flow for a continuation, right? So I've taught you guys about order flow in the past, I think 4 videos, right? And if you know, if you have been following, if you watch those 4 videos, I think we used ETH very well, right? ETH is the one pair that follows order flow very well, right? And that was what we used in citing out examples when we were trying to understand what order flow is and how to catch continuation trades using it, right? So you can see how price just moved here, and the sluggish movement, right, that is what also take note. That's what gave us a little bit of confidence to catch the continuation trades above this region. So you can see how price is just creating that range, right, tapped into that and boom, sold to the downside, right? So that's a confluence. So if you're an aggressive trader, you caught that trade, you would have taken a sell position off, right? So it's a kind of liquidity to take to liquidity target scenario, order flow scenario, right? Because that order flow also corresponds with a 4 hours imbalance, so that's a good confluence to catch that trade, right? So stop loss just above the eyes, and targeting this region, you see it's not up to 1:4, and for me, I love catching 1:4. So what I did was to use my Fibonacci. I've done this, I've taught you guys this move in the past. Like, I love catching, adding like a 25% off my TP if it's not up to 1:4, right? And if you look at this, immediately I added 25%. It's now it now gives us a beautiful 1:4 target, right? We can now have a beautiful 1:4. Yeah, I caught a beautiful 1:4 trade there, something like that. Okay, so you can see. So if you don't understand what I did, go back to the Fibonacci videos of, or is it Fibonacci? Yeah, Fibonacci, when we talk about market structure, using it, right? So market taking out that liquidity right here and hitting take profit. Remember the trade that was caught beautifully here was say on scalper mode was 2 hours, right? Yeah, it played out in 2 hours. As a scalper, you don't have time to wait for long. For day traders, let's see how long this trade took. I think it took up to 16 hours, right? Yeah. Okay, look at that. This is a 4 hours time frame from entry, which was this 4 hours, 8, 12, 16. So it took 16 hours for this to play out. So you can see the basic difference between scalp trades that just took 2 hours and this one that took 16 hours. So day traders have that time to wait, right? So it still hit profit within that day, right? So that is the two examples. So for those of you now saying, "Oh, smart, what if I don't want to take trade off this imbalance aggressively because I don't know if market would maybe market might have been reacting from this 15% bullish region, right? The imbalance here, maybe market has been reacting from this imbalance for a continuation. So how do we know if we don't want to catch the trade aggressive? So if you're not an aggressive trader and you don't understand that move, you want to catch continuation, of course price will always give you an opportunity for a continuation. So let's look at this trade as if we didn't take it aggressively, or we would not have taken this trade aggressively. Would there be another opportunity for us to catch a trade? So let's look at that real quick. So this is still the point of interest we are looking at, that price mitigated. So let's go to let's look at, I want to be able to see this range or this uptrend where, so I'll go to smaller time frame to see that. So okay, good. Now this is when price tap this POI. So you don't want to be aggressive, right? You want to wait and see if market will shift structure so that you can now go in for a safer trade, which is the continuation. So now market made a low, high, a low, a high, a low, a high, then a low, right? This was the previous low, but you see that there was no actual body candle close. The market made a low and pumped aggressively to this side. So basically no body close. So where did market now shifted? This was the new low market created, that created a high but could not pass the previous high that mitigated that your point of interest. So this will now be the low, right? So where did the shift to structure occur? All the way right here. This is where that shift in structure occurs. So if you go to say 1 hour time frame, you see that this was now the move. So it's like this, you had markets moving all the way to an APO high, right? Then market created a low, right? Trying to break it for a continuation, could not. Tap into the region and shifted structure. Okay, so this is the move now. So this is where we had, so this is your point of interest. I'm just giving you this, guys, this example. So this was the one that tapped into point of interest. Now we have the market structure shift. Okay, so an aggressive trader would have taken his trade and TP here beautifully because he can take the risks. He has seen the move several times in the past and is aware of what he's doing. Now a confirmatory trader would wait. Now if you look at this on the 1 hour time frame where market shifted structure, do we have any point of interest? Of course there is a good point of interest for continuation of the trade. The point of interest we took a trade off serves as, on 15 minutes it can serve as the order flow region on the 15 minutes time frame. On the 4 hours time frame, which is analysis time frame, it served at, it was an imbalance, right? So it means when market shifted structure, we can also catch continuation trades using a particular imbalance on the smaller time frame. So 4 hours time frame, point of interest is an imbalance, so I can go to 15 minutes time frame to also trade off from an imbalance, right? If I see an imbalance point of interest. So this is the 4 hours imbalance, right? So market has shifted structure. This is the shift. You can see it clear on the 4 hours time frame, right? The shift is also confirmed on the 4 hour time frame, right? A beautiful shift and market pull down. So if I go to the 15 minutes time frame, I'd want to take note of that shift. Alright, so we had a shift 15 minutes, we also have a shift on 4 hours. So let's look at that again one more time. So this was the little market structure shift, and market still created a shift all the way on the 4 hours time frame. So it means after market mitigated the 4 hours imbalance, it shifted structure. So aggressive traders has taken his trade already, so confirmatory traders want to enter, right? So let's go back to 15 minutes time frame, so see if you can see confirmation entry. Okay, so this is the market structure shift here. Right, a beautiful one. So you can see the candle that actually created the market structure shift on this move. Right, so let's zoom that in so you can see it here. This is the candle that actually created the market structure shift. Was aggressive, right, leaving you several zones of imbalance, which can also be a point of interest for your trade. And after this market structure shift, market also made a pullback. Now this pullback comprises of equal lows that we can see here, equal lows, liquidity, pullback. Right, so there's an imbalance, there is equal low. So remember, I've told you guys, first pullback after market structure shift can usually serve as an inducement. So market structure shift happened here in 15 minutes, first pullback, liquidity, which market used to move to the downside. So if market can retrace, so there might be an opportunity for you to catch a continuation trade here off the midpoint of this imbalance. You can catch a continuation trade here, putting your stop loss just above this region, so something like this. Right, so confirmation traders would be patient, waiting for market to create those moves. And right, so you want to catch something like this. So let me just mark it out well. This will be the 50% region. Stop loss should be above, give it a breathing space, right, because the price sweeps, and something like this. So if price were to continue bearish, this would also be a good room to catch continuation trades. You target lower levels below, the market can go ahead and sweep, so you can get your beautiful 1:4 of this trade, because all the moves is showing that, oh, market can pull back. So whatever market is doing that, I don't know. So this area will be a good area of target if market decides to start what, buying. Right, when it gets to this area, I would be looking to catch a continuation from this region down. Right, so this would be beautiful levels. Right, so but the aggressive traders, they have taken their profit already, they're out of the market. If they see this move, they can also want to buy, because they can also want to sell. So this region can serve as a zone, right, where market can also sell from all what we have seen here: a shift, a pullback, two equal lows, liquidity, point of interest, then boom, direction is already confirmed from the shift we saw on the 4 hours time frame. So if market is going back into that region, so we can expect market selling into lower zones of, maybe if there's a strong demand zone here, we can expect market to sell towards this region. Right, so this is that's that for that, for those who want to catch continuation trades. But those who caught this move, beautiful. Right, so what am I saying in essence? Even if you're not catch this move, you can also see something like this appearing in other pairs. So it's just for education, right? You catch this move, you can see something like this happening, even not today, not tomorrow, not 1 week later, right? Something like this, then you know that, oh, this pattern is happening, and these are what I need to see. The way price reacts, the way price moves, I need to see those moves. And if I can see it, boom, I can catch beautiful trades as a day trader. So that'll be all for today. I hope you've really learned something. I know you learned something. So something new, right? Every day we're pushing it back to back till we get to the end of this challenge. So thank you for watching. See you guys on the next one.